There are many types of trading forms in the market, and every trader needs to make a decision. What is he going to trade? Is he going to scalp? Is he going to trade intraday? Is he going to trade end of day? And there's different advantages and disadvantages to every type of trading. Now, it depends on a lot of things. I want to go through 3 broad types of trading so that you can just get an idea what every one of them involve and what it means to trade. So the first type that everybody comes to me always about is scalping. Now, scalping is not for beginners. Let's get that straight up. Scalping is not for beginners, it is for advanced traders. You cannot come into the market and decide, I'm going to be a scalper. That is something that you will grow into over the years. Now, scalping is done on tick charts, on 5-minute charts, on 1-minute charts. So it's a highly active form of trading, and it's going to consume your time. You'll have to be very, very focused. You won't be able to walk around or go make a cup of tea or anything like that. You have to sit and wait in front of the computer screen for these trades to come along. Now, the advantages of scalping is that you never take positions overnight. So you don't have overnight or over weekend risks involved. All you have is your trades during a specific session. You will select maybe the European session or maybe the US session, which is the afternoon session, for 2, 3 or 4 hours. And some guys only trade 1 hour, but they would sit and intensely trade. Now, in my experience and my humble opinion, you need about 2 to 3 to 4 hours to catch most of the moves during a big session. But it's going to be very time consuming. It's another form of slavery actually, because you have to sit there. You have got no freedom. Yes, once you've done, you've got freedom to do what you want to do. Is there money in scalping? Yes, there is money in scalping if you 100% understand what you are doing. Most traders, especially newbies and intermediate traders, what they do, they come in, they make a ton of money during the day, and at the end of the day, most of the time, or maybe a week later, they lose it all and much more. Because most traders scalp without a stop loss, which is very, very important thing. And I know I can scalp. I've done it for many years. You see this gray hair? That's 5-minute charts. That's scalping. The big problem with scalping is you cannot really scalp with stop losses in the market. Maybe on the higher time frames a little bit, but usually your stop loss is bigger than your profit. So you're going to need high hit rates like 80, 90, 95%, which is very difficult. It sounds very sexy, it sounds amazing, but it is definitely not that great and that easy. So for me, scalping, although I've done it in my life, I think it's my least favorite thing about trading is to scalp the markets. Why so many people like scalping is that they believe a lie. They believe that the more I trade, the more trades I take, the more money I will make. And that is definitely the biggest lie in the market. I can tell you one thing. I've been trading for many years now, since 2003. And I've done all of them. I've traded every time frame in the book, from 1 minute, 5 minutes tick charts, 15 minutes, 1 hour, 4 hours daily charts. And I can tell you one thing, that 1 hour or 4 hour trading makes way more money than scalping, because you don't go through that phases of losing that extreme amount of money. Scalping is a very, very advanced thing. So before you get yourself into scalping, make sure you can trade the higher time frames, that you can trade end of day charts, that you are very good with 4 hours and 1 hour charts. Maybe even eventually, after a few years of trading, get used to 15-minute charts, and then only you start to skill yourself to become a scalper. I know it sounds very sexy, but it's a tough thing to do, and it's not easy. The second type of trading is what I call intraday trading. Now that's done on 15 minutes, 30 minutes, 1 hour charts. And that means that most of your trades you will enter during the day, and most of them you will close by tonight. Maybe a 1 hour trade can go into a second or a third day, but that doesn't happen a lot. most of the time you are in and out the trades in the day. But it also needs a lot of focus. You can walk away from the computer, but it depends on the time frame that you trade. If your time frame is 15 minutes, that means you have to be there every 15 minutes. If your time frame is 1 hour trades, you have to be there every 1 hour. And you must decide based on your life. Are you busy? Are you driving around a lot? Do you have things to do in your business? Depends on your life. You must decide what you can do with your time and with your money for that matter. But it is very important to understand the reality of day trading. You cannot just walk around and have a cool, free life, but you're trying to trade 15 minutes or 1 hour charts. So that becomes difficult. You must understand it's also like a job. You have to attend to the markets on a consistent basis. I do love 1 hour trading a lot, but it is time consuming. Intraday trading definitely is difficult, but it can definitely be done. I would say you would be at a level of intermediate knowledge to be able to do intraday trading. So do not kick off with intraday trading. First go for the higher time frames, swing trading, which is the next trading I will show you. That's my favorite. But before you attempt scalping, you'll have to attempt intraday trading. And before you do intraday trading, I would rather first focus on swing trading, which is the next subject that I'm going to do. Swing trading, definitely my favorite. This is mainly done on end of day charts and 4 hour charts. And you can immediately see here that there will be a lot of free time available when you do this. Because if you trade on a 4 hour chart, you only have to have a look every 4 hours. And yes, there's 6 4-hour bars in a day, but you only need to attend to 4 of them because you don't trade the midnight bars. So early morning, lunchtime, late afternoon, and then in the evening, 4 simple decisions you have to make. Yes, I do incorporate 1 hour trading in my 4 hour trades, only if I have enough time. But you can just think that a 4 hour chart means it gives you 4 hours between every bar to enjoy your life or to do what you need to do. You can run your business, you can go certain places, you can do anything that needs to be done during that 4 hours. End of day trading is even better. You only have to look at the markets once a day. Early morning, you wake up, you do your analysis, you place your trades, and off you go, enjoying the rest of your day. That you can even do while you are traveling, while you're on holiday, while the kids and the wife and the rest of the family is in the showers in the morning quickly. You just jump in, take your trades or look for your entries, place your orders, and off you go. It will take you 10 or 20 minutes a day, and you got the whole day of freedom. Now for me personally, freedom is much more important than sitting and getting myself into another form of slavery by sitting and staring at the computer screen. I have done that for many years, and I can tell you it sounds nice and it sounds great, but it's not. On the end, our human nature is to have freedom, have choice what we do with our time, when we do it, and with whom we are doing that. And that is more important for me than sitting there and scalping or sitting there keeping myself busy with intraday trading. Then there's one final thing that you will have to remember. Depends on your personality. Are you really a trader or do you have an investor's attitude? Now it doesn't help that you take a square peg and try to push it into a round hole. Okay, so you cannot apply investors' rules on trading strategies or trading rules on investor strategies. So you must understand just the difference between the two so that you can either change your mind or that you know exactly what you're getting yourself into or prevent the one completely. Now, the trader trades to make cash. That's it. We're trying to make cash every month, every day, every week. That's what we're trying to do. We manage our risks with stop losses. So there's a point on the chart where you are wrong, and that's where we'll get out of the trade. So we will manage our risk with stop losses, we will set targets, we will take cash when it's there for us to take. We are very interested in the price action because price action is everything for us. We are very interested in short-term trends also because a short-term trend, that's the thing that will give us the profit. That will take us away from the stop loss to the target where we can bank our money. On the other hand, the investor wants to receive recurring income. He wants to get dividends or swap fees. They manage their risk not with a stop loss, but with diversification. trying to have multiple sectors, multiple shares, multiple stuff open and try to hedge themselves, but they won't have stop losses in the market because they are investing. They don't really worry about short-term trends. They're only looking at the larger trends, the larger picture that the market is giving. They are really not interested in the short-term trend. They don't worry about price action at all. They really don't care about price action. They only worry about this long-term trend and the dividends they will get, or the swap fees they will get. So you can see that it is impossible to apply the investor attitude to a trader strategy, or your trading strategy to investor's attitude. It's just something that you cannot do. So on the end, it's very important to understand what is trading all about. Trading, yeah, there's a lot of different forms of trading, yes, but it's all trading. All of them have a stop loss, all of them have a target. All of them we're interested in targets, we're interested in short-term trends, we're interested in price action. That is trading, and everything I do is for the trader. None of the stuff I present is for the investor. Investor rules doesn't apply to trading.